successfully applying ChartLab Pro's process for your successful investing experience. The first step is to use a top-down approach, and that's meaning looking at the S&P 500 before we ever start to look at individual equities to add to your portfolio. The idea here is to protect your assets, preserve them, and grow your capital base. So how do we apply this process for the greatest success? Well, the first question we have to answer is, are we in a favorable market environment? Meaning, is the S&P strong? Is it a strong buy? Or are we decreasing in rating value, which we will explain in some later presentations. So even though we're not trying to make a market call on the top or the bottom, we do want to be aware of the most favorable market conditions. Ideally, we want to allocate to equities when the S&P moves to a 5 or a strong buy. Same thing. And we will again demonstrate this in later videos. Currently, as we can see in the screen, the S&P is approaching overbought in this S&P 500 update verbiage that's located right here on the top. The overbought metric, or in this case, the approaching overbought metric, is called our counter trend indicator. This indicator we use as a risk management tool to lock in profits. The probability of buying a stock once it moves from a buy to a strong buy and holding it until it reaches an approaching overbought or an overbought level, we will see a significant profit. We believe that prices more often than not will revert to their mean. So the further away a price moves, the greater risk you will have for that security or market to revert to its mean and cause downside volatility, or in simpler terms, a correction. In the videos to come, we will discuss in greater detail how to apply both the buy-sell ratings and use the counter trend indicator. Please note that just because a stock says it's overbought, this does not mean it is weak in any way. You're only going to get extremely strong stocks that are overbought because you have more demand chasing supply, pushing up the price of that security. Okay, so since we are not investment advisors, you need to understand your own risk tolerance and how to apply the ratings based on your risk tolerance. We will discuss in the videos to come how to actually reduce your portfolio's risk based on your own risk tolerance. So you can see here that we've highlighted reducing exposure. For the most conservative investors, you will want to reduce more risk because it's less likely that you can endure more downside volatility. And conversely, more aggressive investors will want to sell less equity exposure because you could handle more downside volatility. So again, just to reiterate, what we're looking to do on a top-down approach is to participate in strong markets where the S&P is increasing in strength. In the next video, we will discuss how to identify for security selection individual stocks for your greatest potential for maximizing portfolio returns as the S&P increases.